Good afternoon. It is Monday, June 29th, about 15 minutes before the market closes. I wanted to pop in with an anecdotal story today. And I also wanted to talk about, I got some feedback that's funny from my podcast. Wanted to mention Warsh on interest rates and, you know, uh, the anecdotal thing. I'll jump right in there. The anecdotal thing that, well, actually, I'll start with the feedback I got back from the podcast. Somebody wrote a note to me, and I got here's the note. It said, "Saw the link to your podcast forwarded by a friend. I wanted to make money fast in the market, so I clicked on it. Needless to say, it put me to sleep listening to it pretty quickly later at night." So this person was listening to it and put her to sleep. Uh, Then she goes on to say, "Who cares about all this market history? Isn't the point to make money?" Yeah, I mean, it's true. It is the point to make money. Then she says, "On the positive side, I enjoyed David Titus, his quips and points, especially when I woke up from my catonic sleep state towards the end when you guys were vibing more. For you, you had a lot of history and market facts. However, you were as dry as a 3 day old scone I brought back from a New York City deli." I thought that was pretty funny. And then she says, "At least I found a new podcast to put me to sleep while my sleeping brain absorbs market facts." So that was a review I got on the podcast. It tells you a little bit about the market environment. And then on that note, I was at lunch today, and I apologize. It's the sun's in the background. I'm out on a balcony here. It's um, it's actually in 90-degree range, so pretty hot. It's gonna be in the mid 90s this week. So I want to record this. I'm gonna go play racquetball with my daughter. But what I wanted to mention specifically was at lunch today. I was just by myself at a lunch, and I heard so many people talking about stocks. And obviously, I was listening in, and the comments range from, I've loaded up on SpaceX because all Musk does is make money for everybody. Tesla went up X amount. SpaceX could do the same, and it reminded me of being a broker at Schwab in the late '90s, early 2000s. I was actually at American United Life '99 as an analyst, and then Schwab as a broker um, for 3 years right after that. And it just hearing people buzzing about, and these weren't people, I would glance, and it wasn't people that looked like they were in this investing business. It was just, it was unique because everybody's got a phone, right? And that's one thing that I'm not sure is healthy. It's a gambling culture, and you see that. I saw a fact today that more money is spent on sports gambling than is actually spent on, uh, you know, travel and restaurants, which is pretty amazing. So, the market is right there in front, and it's visible for everybody. And the tickers that I heard just at the lunch place, I heard NVIDIA mentioned, I heard Google mentioned, I heard Microsoft mentioned, I heard AMD mentioned, I heard Applied Materials mentioned, and this is just at a lunch spot, not frequented by, investment people, and people were looking at their phones, talking about the markets, and it just struck me. I wanted to document that, how remarkable it is in a way that it's almost like a game on the market. And I used I use this, this Jesse Livermore has this quote: "Are they eating sardines or trading sardines?" And the point was, when he was trading, if you're just trading something, you don't care to take delivery. It doesn't matter. You're not going to eat the sardines. And most people don't know the underlying. They have no idea the price of sales or what the free cash flow is or the dividends or the any of the valuation multiples. They're just tickers on a screen, that are trading. So that it's pretty wild. Um, the other two things I want to comment on this podcast is I don't think Warsh is going to raise interest rates. The market has gone from pricing in 75 basis points of rate cuts in January of this year to now pricing in a rate hike. I've used a chart that shows in the past the market expectations or the Fed funds rate expectations of what will happen with interest rates isn't often very accurate. Warsh he's in there to change the Fed, and you can see it in this latest FOMC statement, where the wording was cut from over 300 words to less than 100. I think he wants to return to the more opaque era of the Greenspan era. He was the one person that didn't offer their forward guidance. I think 18 of the 19 other Fed governors did. He was the only one that abstained. And Warsh has consistently said he wants to shrink the Fed's balance sheet. So I think, and I mentioned this before, CPI and rent adjusted equivalent is almost 40% of housing, and rent adjusted equivalent is almost 40% of CPI. That's going to put downward pressure on CPI here, as both those are rolling over, housing prices and then rental rates nationally for apartments are rolling over too. So that's going to give Warsh, I believe, room to be patient. And, at worst, I don't think he's going to raise rates. But if the inflation data follows CPI, and follows the housing data, and CPI usually does, because housing in the rent adjusted equivalent is such a big piece of it, almost 40%. That's going to allow Warsh, room to cut rates, and that's not priced in the market now. So you're starting to get a bounce in some of the housing stocks, and it's the price action is very volatile here. The last 15, 16 market trading days, including today, opened up, sold off pretty aggressively, then rebounded. You're at quarter end right now. I can feel a little sweat. It's hot outside. We're in the sun right here too, but we're at quarter end. And remember last quarter end, where I wrote the article March 29th, it said people are too pessimistic, but then you had a rally, on the 30th, 31st to end the quarter. So typically you often get rallies at quarter end. We've had a big run from those lows in March. So it wouldn't surprise me, that you get some strength here in the markets the next, well, we've seen it today. We'll see what happens, because today's the 29th, tomorrow's the 30th. And then the last thing, I've owned Micron since 2015, and I've also owned AMD, 24 and 25. So even though, I think semiconductors are at risk here, and it was interesting, the Korean market, the triple levered Korean ETF was down 3 times. It was down 11 or 12%, the triple levered ETF, but then it came back today. So even though I'm nervous about the semiconductor market, I have participated somewhat on the long side. So not a complete, doomsday bearish person from that side, but it is extremely extended, as I've written about, parallels the 2000 market. So just be careful there, and I think you're seeing a lot of it's a really interesting market where you can collar those, because you can sell longer term calls for very attractive premiums and buy puts. So I think people are doing that, especially some of those that have had these incredible gains. So I'm going to go work up a sweat playing pickleball. I'll probably post this when I get back from that later tonight, but just wanted to check in, say thanks for the review. This is a shorter podcast, may not put you to sleep as effectively as the last one, But David, by the way, is from New York City. We've got some members out there. I know David Highland's out there. Sanjay's obviously out there. But appreciate the reviews, the good and the bad, and thank you guys for participating in the debate and discussion and listening. Take care. Have a good Monday. Bye.